India's move to tax crypto profits and transactions have backfired. Welcome to the Daily Forkast, March 29th, 2022. I'm Megha Chaddah of Forkast, covering all things blockchain. India's tax on profits from digital asset transactions goes into force from Friday. But investors aren't happy and the government could lose out as a result. We'll take a look at that story plus a whole lot more coming up. Let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Let's kick off with more moves coming towards mainstream acceptance of cryptocurrencies. The Australian crypto exchange BTC Markets has announced it is partnering with financial services giant Mastercard for payment options. The deal will allow customers to make direct debit, prepaid or credit card payments for purchases of cryptocurrencies from the platform. The move is part of a broader trend by companies like Mastercard and Visa to incorporate cryptocurrency functionality into their services. Last year saw Mastercard partnering with another Australian crypto exchange, CoinJar, to offer a crypto payment card. Australia's crypto sector is bracing itself for a broad regulatory sweep following a wave of proposals from politicians for the industry. Meanwhile, the United Arab Emirates is fast becoming the next crypto hub, with two exchanges announcing plans to open offices in the region's trade center, Dubai. Singapore-based crypto exchange Crypto.com said it will establish a regional office in Dubai and announced it will be the exclusive crypto exchange partner for the government-backed Investopedia Summit. Meanwhile, Bybit, which is also based in Singapore, said it has received an in-principle approval to conduct crypto business in the UAE and that it will move its global headquarters to Dubai, with operations to begin as early as next month. These are just the latest moves in the UAE's drive to become a center for the virtual asset sector. Earlier this month, two other major crypto exchanges, FTX and Binance, acquired crypto licenses in Dubai. And Dubai, which is one of the 7 members of the UAE, recently adopted its first virtual assets law to create a legal framework for businesses and investors. You can find those stories and a whole lot more at Forkast.News. Over in India, the government's attempt to profit from digital asset gains could be backfiring, with new investors being put off and existing investors seeking to make an exit. Forkast Pradipta Mukherjee reports from Kolkata, India.
India's down-on-its-luck government is seeking its pound of flesh from the gains made by investors in digital assets. A 30% tax on all profits made by trading virtual digital and crypto assets starts this Friday, while a 1% tax taken at source on all crypto transactions begins July 1st. Not only that, even the legal status of the asset class hangs in limbo, with the Reserve Bank of India repeatedly cautioning against crypto. India has one of the youngest populations in the world, and while digital assets have proved very attractive to younger people and first-time investors, these new taxes could really hit those hardest who fall into the lowest income tax brackets. All this has left these younger investors reconsidering their options. Indeed, even some of the keenest followers are adapting their portfolios, like 24-year-old Neil Kukreti, who posts crypto educational videos on his YouTube channel.
I will be reducing my crypto exposure by 30% till then, and I will be taking out all the fiat currency that I have lying around in various exchanges so that I can reinvest it later after April and reduce my tax exposure. So overall, the total value I have invested in crypto will be decreased due to it not being as favorable to invest in.
And one expert told Forkast, it's no surprise younger investors are getting out.
The brave young people who approach this world of cryptocurrencies would rather go to other segments of investments like stocks or commodities, where the laws and the tax laws in particular are less draconian. What the government has done is to make cryptocurrency trading a bit like an uninsured home or car, where if you suffer a loss, it's gone for good.
Experts say India would have been better off starting with a lower rate of taxation for this still nascent investment class to help address the rising fiscal deficit in the country. India's fiscal deficit, which is the difference between total revenue and total expenditure by the government, is projected at 6.9% for the fiscal year which ends this month, which is higher than previously estimated. For Forkast, I am Pradeepta Mukherjee, Kolkata, India.
NFTs started life as digital collectibles, but as they go mainstream, dozens of new use cases are being explored. And this includes using that NFT sitting in your digital wallet as collateral to borrow money. Benjamin Stanny, Business Development and Sales Director at Matrixport, a crypto financial services company serving both institutional and individual investors, joins in to talk about just that. Great to have you with us, Benjamin.
Thank you very much.
Benjamin, now so far, people have largely looked at NFTs as a means of collecting digital art, but the underlying tech has a lot of potential for developing financial products in the DeFi space. What do you think?
Yes, you're absolutely right. NFTs are so much more than just expensive JPEGs that you can collect. A lot of them have turned out to be entry tickets to virtual communities or can become part of your digital identity. They can be in-game assets or have a functionality in the Metaverse. So the point here is a lot of them also have utility. And so naturally there's people who want to use this utility. There's people who want to invest in this utility, and there's people who want to build on top of it. We at Matrixport, we're at the forefront of that, and we just published a report about the financialization of NFTs, to what you alluded to before. We include information about rental, fractionalization, and other derivatives that are built on top of that.
Well, there are dozens of platforms like Arcade and NFT5, besides numerous others, where one can borrow money using NFTs as collateral. Now, they've seen tremendous growth despite charging eye-watering levels of interest, which can run into 50 to 60% in extreme cases. What's driving this growth?
We're right now witnessing the financialization of NFTs. And by nature, these tokens are non-fungible, which primarily impacts the liquidity and therefore makes them, in general, less suitable as collateral than, let's say, fungible tokens. However, using non-fungible assets as collateral is actually not something new. If we look at our physical world, for example, a house or a flat is a unique asset, so it's non-fungible. But of course, you can borrow against it. So the question is, why not against an NFT? Especially if it's a high value NFT that belongs to a collection where you have an active liquid market in it. You could take the floor price, for example, look at the attributes of the NFT and how rare they are in the collection, and then determine the price. That is similar how you would look at the real estate price by determining the price in an area, and then look at how your house is worth, despite the house actually not being traded. So we are also planning to accept high profile NFTs as collateral soon. I stress here high profile because I do believe that there's a long tail of NFTs that are probably not even worth the gas that has been used to mint them.
And finally, what would you say are the main risks for those lending against tokenized assets? Given the lack of regulation and oversight by centralized agencies, is there an increased chance of scams and digital thefts?
I think the risk is actually twofold, yeah. So the first one with NFT lending as collateral is actually the same risk that you would have when you do collateralized lending with other assets. It's the risk that the asset itself loses value and the loan can't be recuperated. This can happen by overestimating liquidity or poor risk pricing. And again, in our physical world, that's not something that's unusual. Let's take the 2008 subprime mortgage crisis in the US, for example. That might be an example. The other angle, however, is more unique to digital assets. A malicious actor can abuse a smart contract loophole, or they can just simply hack your wallet and transfer the NFTs out. And because how young our industry is, there isn't much of a legal oversight or actually law enforcement to such acts. To be quite frank, it's not even clear that all of these acts are actually representing a violation. But of course, you want to protect yourself. So how do you do that? Well, a good way of mitigating this risk is using cold storage and a trusted custodian. And safeguarding our assets, I think, is something that should be highest of your priority, especially in crypto and digital assets for the long run.
all very valid points right there, Benjamin. And we are just at the inception point of understanding the potential of NFTs. Thank you so much for joining us today with all the insights, Benjamin.
Thank you for your time.
And that's the Daily Forkast, bringing you what you need to know about the blockchain world from our vantage point right here in Asia. For more, visit Forkast.News. I'm Megha Chaddah. Until next time.